Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about the speech that was heard around the world on Friday and definitely around the markets, which was made by Mr. Jerome Powell in Jackson Hole, Wyoming. And in this speech, he made it very, very clear that the Federal Reserve is set on fighting inflation, even at the cost of some pain and or further pain in the U.S. economy. Okay, so if you guys are paying any attention, which I imagine the far majority of you are, you would know that the markets were very, very unhappy about some of the statements that he made here. The S&P 500 index, the good old SPY, was down almost 3.5% on Friday. And of course, the Dow Jones, the NASDAQ, pretty much every stock on all of our watch list, aside from direct hedges like vixy and uvxy. Talk a little bit more about potential portfolio protection as we dive into the charts. But I'm sure you guys can attest to the fact that the far majority of the markets on Friday were well in the red following this speech. Okay, so we'll kick off the video by reading over some key points from this article, just touching on some of the main statements he made that really made the markets unhappy. And then I do want to dive into the macro newsletter that I wrote on Friday during all of this madness going on, and why I believe the market's reaction was maybe a bit too visceral and a bit uncalled for, and why I do think we could see somewhat of a comeback. So that may seem crazy, that may sound completely naive following a day like Friday with the news that we got, but personally, I don't think the news was much of a shocker. I do think that was, once again, an overreaction. And of course, I will do my best as we read over just a few articles here and, once again, diving into the charts, why I do think there is definitely the potential for a rebound. Okay? So I'll read over this guy, go over, again, just my thoughts on that Fed message, on the market's reaction, and on just kind of general thoughts around inflation as well, and potential catalysts over the next 30 days that I do think could potentially bring some meaningful relief to the markets. Okay, at the end of the video, at last, I do want to dive into the charts. We'll take a look at the S&P 500 again, once again the SPY, and talk to you about a few potential scenarios that I see playing out on the tape in terms of price action over the coming month, and once again a couple of catalysts. I will explain why these dates are here as we dive into the charts. Okay. And once again, talk to you guys about how I'm protecting my portfolio. Thank God, Waves Capital, we did have some uvxy calls, which pretty much just go absolutely ballistic if the markets are melting. Okay, so a little PSA right off the bat, you guys always stay hedged. Personally, I am optimistic. I do think further relief, especially in growth stocks, small caps, is on the horizon. I do think upside is coming over the coming months. At least for the most part. Again, there's for sure going to be volatility this week, but I do think that for the most part, there is still a lot of upside and mean reversion in the cards. And yeah, I'm excited for what this week has to hold, because it should be super exciting. But ultimately, what the next month or so has in store for the markets overall, and still for some great companies out there that I believe are still very oversold. Okay, so that is going to be the gist of the video. I did have a great article that is a CNBC Pro article titled "Testing June Stock Market Low Isn't a Foregone Conclusion" by arguably my favorite voice in the macro space, Mike Santoli. And I had it all highlighted. I had it all ready. There's a lot of great stuff in here, but it is really long, and I figured I would just cut this video after we cover the charts, and then I'll start a new recording, read over this, make it a separate video, and make that video private, and then send out that private access link to the official members of Waves Capital. I'll send it through the newsletter, and I'll also send it out in the Discord as well. Okay, links below if you're interested in that. I'll plug that later though, but just a heads up once again for the OGs. All right, that is the gist of the video, you guys. As always, if you do go on to gain value from it, please give the video a like. That means a lot. If you're not subscribed, then what are you doing? Subscribe to the channel. Again, this is what these markets are when you learn the most, you guys. It's not necessarily the funnest markets. It's always funner just when you're printing money and the markets always go up like they were a couple of years ago. But Everyone needs a slap in the face sometimes. This is a reality check, and because most of the time it's going to be very, very real, you learn during the real times. Okay, so again, subscribe to the channel and let me know in the comments down below. Do you think more pain is ahead? Not for the economy. The economy is in a rough spot, but it's also, I do also want to make clear this statement, and I don't think this is said enough. The market and the economy are two very, very different things. Okay. Historically, the markets recover way before the economy, okay? And the markets are very, very good at pricing in future economic hurdles. So keep in mind, this is very important, and this will be a fact for the rest of time. The markets and the economy are not the same thing. The markets are a leading indicator of the economy, and the economy is kind of a lagging metric relative to the markets, okay? So the markets price everything first, and then the markets see pain first is an easy way to say this. The markets see pain first, and the economy slowly sees gradual pain following the markets falling off a cliff, okay? So that just provides a general visual. Anyway, super long intro, but I mean, kind of just got a lot of my thoughts across there anyway. But once again, let me know your thoughts. Always love hearing what you guys have to say, and I'll see you downstairs in the comments as well. Okay, let's go over some of these key points and then expand on the gist of JP's comments. Fed Chair Jerome Powell on Friday pledged that the central bank will use our tools forcefully to attack inflation that is still running near its highest level in more than 40 years. In his annual Jackson Hole, Wyoming policy speech, Powell added that higher interest rates likely will persist for some time because the historical record cautions strongly against prematurely loosening policy. That's really what the markets didn't like, is the fact that the markets were kind of pricing in, like the bond markets, the currency markets, were pricing in potential rate reversals where they start to lower rates again, cut rates again in mid-2023. And that did take some people by surprise. But honestly, right off the bat as well, there's a lot of caveats I'm adding in here. But you guys, half a year, 3 months, 6 months, a year is a very, very long time in this current macro. There's a lot that can change in that span of time because things are moving very, very fast. Okay, we're in pretty uncharted waters. Therefore, things are very uncertain, but things are also moving very fast. And right now, although Jerome Powell says that they're not going to do this, that could change in their next Fed meeting after we get the August CPI data, which I will mention right up next. But close this out, the markets, the remarks come amid signs that inflation may have peaked, but is not showing any marked signs of decline. Powell said the Fed will not be swayed by a month or two of data. Okay, so no more expanding. I just want to dive into this, and then we can jump into the charts, and I'll give you guys any more thoughts that I may have. All right, don't fight the Fed is the cliche that's being tossed around a lot following JP's speech at Jackson Hole this morning. Once again, this was written on Friday, so just use some past tense here. This speech is typically long and fairly thoughtful, but this time around he kicked it off with statements that his remarks will be shorter, my focus narrower, and my message more direct. So I do recommend you guys, I mean, you can just go check out this article or probably find this video anywhere, but you guys should watch the video of Jerome Powell actually making this statement. It's usually pretty long, it's usually pretty boring, but I mean, he got straight to the point and really drove that point home in a timely fashion. So go check it out if you haven't. I do recommend you do that. All right, not that one, but that direct message was that the Federal Reserve is unquestionably determined to lower inflation, even at the expense of some pain to the U.S. economy, and the rate hikes will likely persist for some time. Some pain and some time. Really kind of towing the line right there, right? But I think we can all agree that there already has been some pain for some time to the markets and the economy. I understand that the speech was more assertive than some believed it might have been, but as I just said in trade alerts, I'm truly surprised that this caught the markets by surprise. That reaction to the downside was visceral, maybe too visceral. Let's explain why. I want to make clear that it is in fact foolish to fight the Fed, which just means to bet against the Fed. The actions of the Fed. This was the primary bull case for the markets in 2020 and 2021 as the Federal Reserve was printing cash and injecting liquidity into the markets, and it now serves as the primary bear case as they pivot in the polar opposite direction. Although it's incredibly likely that we head into the month of September with some chop, I believe that we'll be seeing some meaningful relief by mid-month, specifically in small caps and growth stocks. Why do I think relief is coming in mid-September? Because the August CPI data, or Consumer Price Index data, is released on the 13th, and the September Fed meeting is on the 16th. Okay, so mid-September, a lot going on there. 9/16, September 16th is also a Friday where many options contracts and financial devices expire. And I do believe, you can fact check me on this, I do believe September 16th is a triple witching, maybe a quadruple witching. Which does just pretty much mean there will be even more volatility than there already is going to be, because come mid-September, again, come the teens in September, it's going to be an exciting time. So stay tuned for that. Excited for the coming weeks. But why do I think the CPI data that comes out next month, for the month of August, will bring relief? It's because gas prices have lowered significantly over the past 30 days. The housing market is falling into a significant recession, and the price of chicken wings has dropped to pre-pandemic levels. Okay, this is a funny indicator, but extremely relevant to the average consumer. Chicken wings, right? Chicken. I'm sure you've all heard about the fact that chicken was like 2x the price, has been up significantly, right? Groceries, just average groceries, not to eat out, but to eat at home. It does affect eating out as well, of course, but just the cost of eating at home. When you go to Safeway, when you whatever the Safeway is, I guess where you're from, Ralph's, King Soopers, whatever it is. Anyway, when you go to the store, you buy groceries, you want to cook a dinner. Sometimes, actually lately, it seemed like cooking dinner is more expensive than going out, right? Finally, that is beginning to cool down. Again, the price of a chicken wing. That's such a good benchmark for the American diet. Unfortunately, I guess. I mean, I love a good wing, but that's the reality anyway. The price of chicken wings has gone down to pre-pandemic levels. The cost of groceries across the board, which was one of the major contributors to ripping hot inflation, is groceries, and those are cooling down significantly. Okay, avocados, fun fact, are down significantly as well. And again, that's just a good sign when it comes to your average Joe, your everyday American who is going to the store and buying groceries. Okay, if the August CPI data doesn't show that inflation is cooling, then I'll gladly admit my wrong here. But it seems pretty evident to me that it is. The Fed wants demand destruction, and that's what they're getting. That's what they've gotten. If that's made clear in the report, then there's little to no chance that the Fed will emit a darker tone than they are now. Okay? And that's a big reason why I do believe the Fed meeting on September 16th, coming mid-September, will bring relief, because it's unless the August CPI data shows that inflation is heating up again, which would be very bearish, then I think there's little to no chance once again that the Fed will come out any more assertive or any more with any more of a negative connotation than they just did, or than Jerome Powell just did in his recent speech on Friday. Okay, so I'll close this one out. I know it's easy to be bearish at this moment in time. That was one of the ugliest trading days that the market has experienced in quite a while. It's always possible that further downside could come, which is why we held on to our hedges. Again, we'll talk about those right after this. Good old vixy, uvxy. Not puts, but again, want to talk to you guys about something. If you're not familiar yet, you can just buy, and if the markets go down, this asset will go up, or this ticker, the stock will go up. Okay? So, it's always possible further downside is ahead. Again, held on to our hedges, but I remain confident in my belief that select growth stocks and small caps still have further upside mean reversion to accomplish over the fall months. Stay focused, stay rational, and stay learning. Winners only around these parts. Waves cap, okay? So, again, you guys, before we dive into the charts and talk some price action, just speculate on price action. Let me know down below, do you think the market's over? Do you think 30 days from today, late September, do you think the markets will be higher or lower than they are right now? And please explain a rationale. Okay, very interested to see what you guys have to say. Let's jump into the charts and call it a day. I mean, call it a day for you guys. But once again, I will record this and send out to newsletter portfolio and Discord group as well. Okay, but this video, let's close her out on the charts. All right. once again, as you can see, I do have 9:15 marked. 9:16 is once again a Friday where many triple witching, many options contracts expire. On top of that, a couple days before is the August CPI data release, and then the day after, again that Friday, same day. That's going to be so volatile, you guys. Definitely chill out now, because we're going to see so much volatility come in September. But once again, for all those reasons I just mentioned, even if we do see a climb down, which is very possible over the next week or two, I still think that relief will come by mid-September. And it actually betters the case for the August CPI data and for the Fed meeting to bring relief to the markets in the case that we do continue our trek down. Okay, so that is mid-September. Mid-October is marked here because this is another big options contract expiration date. And it also comes at a focal point of two trend lines. Okay? Top line of resistance right here on the overall downtrend that the S&P is currently experiencing, which it kicked off, of course, at the beginning of 2022. Overall line of resistance just recently perfectly touched that line of resistance. I mean, to an absolute T. I believe that aligned perfectly with the 200. Was it the 200-day moving average? It was one of the macro moving averages that everyone looks at. I stopped using moving averages a while ago personally, because honestly, these just work better in my opinion. That's what I've found over the years. I spent the first few years of my trading career using moving averages, and I just found that they weren't as helpful as just the good old stick figures, okay? But anyway, perfectly tested that. Of course, are seeing this downtrend right now, and it is creating what looks to kind of be this symmetrical pattern formation, or symmetrical triangle pattern, okay? And that does come to a resolution. That comes to that focal point once again around mid to late October. So we'll cross that bridge when we come to it. I don't really want to focus on that now. But when it comes to the short term, I do think that more downside is ahead. And actually, in this article, it touches on how historically, after a 3% drop, in the major indices, there is typically at least the average following trading session, I believe, is minus 1.5%. Okay, so every time the S&P sees a 3% or more drop, the next day, the next session is an average down 1.5%. So is that possible? I mean, statistically, it is likely that tomorrow, or when you guys are watching this video, the S&P is down about 1.5 or a percentage point and a half. But again, I do think that given just kind of the fact that there was so much objective, positive, fundamental momentum in the past month, over the month of August, again, if inflation didn't cool, then I'm just straight up wrong. But inflation is cooling just from every anecdotal account I can reference. Earnings reports were way, way better than expected. I believe 75% of Q2 earnings were better than analysts expected them to be. And again, there's still so many, especially small caps and mid caps, that are still in very, very oversold territory and at historically low valuations from a PE multiple perspective. Okay? So anyway, in the short term, I do think the S&P is going to come down. I do think that we can come down here to fill this little gap, as well as kind of just test, as well as test this higher low on the S&P's short-term uptrend. That'll take us down about another 2.5-3% from here. But I do think it's very, very possible over, again, maybe the coming week. I believe the end of this trading week is, September 2nd. So it's very possible we just see a bloody week, and by the end of this week, come down here to test the line of supports that every trader is going to be eyeballing. And that would take us down to about 390 on the SPY. Okay? So is that possible? Absolutely. Do I still think that relief is possible from there after we bounce back off of support? I do, and I do think it's likely once again by mid-September. So just stay tuned. Stay tuned for mid-September, because that is going to be an absolute, shit show if I'm being honest. Could be a shit show for the Bulls or the Bears, but we're going to see some crazy moves in either direction. So just stay tuned. Super excited for that, and I will be, of course, excited to trade through that as well. Still some names I'm bullish on, but once again, you guys, just stay hedged. as confident as you are, and I was pretty confident that, and again, if you guys are part of the portfolio newsletter review, know that I was pretty confident. I was positioned in with a much more bullish stance than I was a bearish stance. I had a lot of calls on a lot of names that I thought would see some pops after that Fed meeting. But again, investors just were. Jerome Powell didn't really say anything new here, but he really did drive the point home that they were set on fighting inflation, which I do understand. And that the reaction I didn't expect, but at the same time, it wasn't entirely surprising, I guess. It was just sometimes if it seems too obvious, it's going to happen, I guess. And I've seen that a lot lately. If you think it's too obvious to not happen, then it will happen. And that's just kind of the game theory aspect of it. But again, you guys, just stay hedged. Even if you are confident, even if you're bullish, just stay hedged. Personally, I do have some uvxy calls on deck. Those things were up. I think those things over 2x on Friday. And my portfolio would have been in much, much worse shape than it was if I wasn't hedged with these uvxy calls. So even if you guys are bullish, hedge. If you guys are bearish, then I hope you already have hedges because then you can capitalize on your beliefs. But just stay hedged, you guys. Stay safe, and I'll catch you next time. Until then, always remember, take action. Make waves. Peace, team.